Do you feel like deleting your computer after watching hours of ICT videos without understanding anything about it? Today that changes. I'm Marcus, and today I'll explain how the daily bias concept works. Some of you might already be familiar with ICT. He's a legend amongst traders and has some very good concepts that he shares on his YouTube. Most of these concepts aren't standalone systems, but rather concepts that you can apply to your own system. The concept that I'm going to explain to you should be applied as an additional filter to your trading system. So when the daily bias is bullish, you will only open long trades, and when it's bearish, you will only open short trades. Now let's actually look at what daily bias is. Daily bias is a quick and easy way to check if the next day will be a bullish or a bearish day. You do this by looking at the highs and lows of the previous days. Let's take a look at an example, and I'll explain as we go. Bullish bias. For starters, make sure your time frame is on daily, so each candle is exactly one day. Let's say you start with a bullish candle. Mark down the high and the low of this candle. If the next candle breaks through and closes above the high of the previous candle, this means the bias of the next day is bullish. Another situation in this example is when the first candle is a red candle, we mark the high and the low of this candle. If the next candle breaks the low with a wick, but closes above the low of the previous candle, we also have a bullish bias. Let's take a look at this chart for an example. Here we marked the high and low of this candle. The next candle closed above the high of the last candle, and we thus have a bullish bias. Bearish bias. For bearish bias, it's the same concept but flipped upside down. Let's say your first candle is a red candle and the next candle closes below the low of the first candle. We have a bearish bias and we can expect a bearish day. Now, if you start with a green candle, again, mark the high and low of this candle and the next candle closes below the high of the previous green candle. Even if it wicks above the high, it's also considered a bearish bias. Let's go back to the chart for an example. We marked the high and low of this candle, and the next candle closes below the low of the previous candle. We can thus assume a bearish bias. As you can see, this is a simple way to determine if the day will be bullish or bearish. But keep in mind, this isn't always 100% accurate. That's why you use daily bias as an additional filter and never as a standalone trading system. Combine this with your favorite entry system, and you might see an increased win rate. As always, if you have learned something from this video, please consider subscribing to our channel. That's it for today. Bye.